Check this out. Don't trade earnings. I'm serious. Do not trade these earnings unless you know about these 5 things. I do not trade earnings unless Vera and I agree on these 5 items. I will tell you who Vera is at the very end of this video, so stay tuned for that. In a minute, I'm going to show you the chart Vera and I use to evaluate earnings trades and the 5 criteria the trade must have in order for me to place it. Most traders treat earnings like opportunities. I don't. I treat earnings like risk events. Every earnings play has to pass the same 5 tests that Vera and I built. Most trades fail the test. Our chart shows you exactly what has to line up before I'll trade one. There are a lot of earnings coming up, and the real question isn't, what can I trade? It's, what should I trade and what should I avoid? Most traders jump straight to a direction, headlines, hype. I used to too. But until Vera and I realized earnings aren't about prediction. They're about risk selection. So instead of guessing, Vera and I run every earnings trade through the same standardized risk and behavior presets. Every earnings trade gets the same input, same filters, and what came out wasn't a list of trades. It's a decision framework. This chart is a decision map. So as you will see, on the far left is the earnings date and the stock. That's just organization. It keeps the week clean and prevents impulse trades. You'll see column 2 is average move. This tells me and Vera how much the stock usually moves on earnings. Big number, earnings resets the price. Small number, price tends to stay contained. Next is column 5. Why? It's the behavior code. This column explains what kind of risk this is, not direction. What does the stock do during earnings? Is it defensive? Headline? Is it thin? Capital is heavy? Extreme moving like Tesla? Range? Premium fades? To mention a few of the labels we use. These labels don't tell me where the price is going. They simply tell me how to manage risk or when not to trade at all. Column 6 represents strategy. This column reflects the strategy based on the findings of the previous columns. I only use 2 earning structures, naked puts when behavior supports them, and put vertical spreads when risk must be defined. Sometimes I sell a naked put just because I want to own the stock, not because of earnings justifying it. But that's not speculation. It's just getting paid to buy a stock that I want. Next is column 7, the dark pool status. There are 3 levels we're looking for. Accumulation, which means institutional buying, supportive at current levels, bullish bias. Distribution, meaning institutional selling, upside likely capped, bearish bias. And neutral, which is a balanced flow, no clear institutional edge. And the final column is called override. And this is where I decide if I agree with Vera or not. If not, I'll override her, or I'll make a note to come back and revisit that stock at a later time for further review. So as you see, this chart determines eligibility. Some earnings qualify, some don't. I don't trade earnings, I trade risk. Earnings just tell me when to look. Capital is deployed only when timing and math allow it. And remember, don't trade for one time, trade for a long time. Daily question and answers at 3:45 p.m. daily. Sunday live at 5:50 p.m. And join our Discord. Subscribe. Oh yeah, and who's Vera? That's my AI assistant.